There is a number that controls your rent, your groceries, your paycheck, your student loans, your vacation, your future. It moves every second. You don't vote on it. You don't see it on the news unless something breaks. But it quietly decides how expensive your life will be. That number is the value of the dollar. And here's the uncomfortable part. No single person decides it. Not the president, not Congress, not even the Federal Reserve. So who does? Because if nobody controls it, then why does it keep changing? And why does it always seem to change at the worst possible time? Let's break down who actually decides the value of the dollar, and why the answer is stranger than you think. If you've noticed that everything feels more expensive lately, you're not imagining it. Inflation surged above 9% in 2022. That's the highest in 40 years. Gas jumped, food jumped, rent exploded. Your dollar suddenly bought less. But here's the twist. Even when inflation cools down, the dollar's value is still moving. Because the dollar has two different values. One at home, one globally. And they don't always move together. When the dollar gets stronger globally, other countries feel it. When it gets weaker at home, you feel it. Sometimes both happen at once, and that's when things get chaotic. So let's start with the basic question. What is the value of the dollar? The dollar doesn't have a fixed value. It's not backed by gold. It's not tied to oil. It's not anchored to anything physical. It floats, which means its value depends on what someone else is willing to give you for it. That's it. If $1 buys you one loaf of bread today and half a loaf next year, the dollar lost value. If $1 buys 100 Japanese yen today and 150 yen next year, the dollar gained value against the yen. Same dollar, different reality. So who sets that exchange rate? The foreign exchange market, which sounds technical, but it's basically a giant global auction. Every second, trillions of dollars move around daily. Banks, hedge funds, corporations, governments, they're all trading currencies, betting, hedging, protecting themselves, trying to profit. And the price changes based on supply and demand. That's it. No committee meeting, no master dial, just constant buying and selling. But here's where it gets interesting. Why does demand change? Let's talk about the Federal Reserve, because most people assume the Fed controls the dollar. Kind of, but not directly. The Fed controls interest rates, not exchange rates. When the Fed raises interest rates, something subtle happens. U.S. bonds start paying more. Savings accounts pay more. Treasuries become more attractive. Investors around the world notice. Money flows into the United States to buy those higher-yielding assets. To do that, investors need dollars, so they sell their currency and buy dollars. Demand for dollars rises. The dollar strengthens, not because the Fed said so, but because global investors chased yield. So the Fed influences the dollar, but indirectly. It's like adjusting gravity instead of pushing the ball. Now flip it. When the Fed cuts rates, money flows out. The dollar weakens. Suddenly, imports cost more. Oil costs more. Inflation creeps in, and your grocery bill starts rising again. Notice something. The Fed isn't trying to control the dollar. It's trying to control inflation and employment, but the dollar reacts anyway. That's the first hidden mechanism. Now let's talk about Congress and the Treasury. Do they control the dollar? Again, not directly, but they influence it through spending and debt. When the government runs large deficits, it issues more treasury bonds, more supply, more borrowing. If investors believe that debt is manageable, the dollar stays stable. If they start worrying about long-term sustainability, confidence shakes, and currencies run on confidence. If trust cracks, so does value. But here's the irony. The US can borrow enormous amounts of money, more than any other country, because the dollar is the world's reserve currency. Which brings us to the next layer. About 60% of global foreign exchange reserves are held in dollars. Oil is priced in dollars. Global trade flows through dollars. International debt is often issued in dollars. This creates constant demand, even if Americans aren't thinking about it. If a company in Brazil wants to buy oil from Saudi Arabia, they probably need dollars, so they buy dollars, which supports the dollar's value. It's like the entire world pays a subscription fee. But here's the uncomfortable truth. That power cuts both ways. If global trust declines, if countries diversify away, if alternatives rise, demand falls, and the dollar weakens. We saw hints of this after Russia's reserves were frozen in 2022. Countries noticed and quietly began buying more gold, diversifying reserves, hedging risk. They're not abandoning the dollar, but they're preparing. Because whoever controls global trust influences the dollar, and global trust is fragile. Here's the part nobody likes to admit. Markets move faster than governments, faster than policy, faster than speeches. If investors believe the US economy is strong, the dollar strengthens. If they fear recession, it weakens. Sometimes before the recession even happens. Traders react to expectations, not just reality. And expectations change hourly. Suddenly billions move. The dollar shifts. Your mortgage rate adjusts. Your 401k moves. Before you even hear the headline. So who decides the dollar's value? Investors, governments, central banks, corporations, foreign countries, consumers, all at once, every second. It's decentralized, but interconnected. No single lever, just pressure points. The dollar's value isn't about pride or patriotism. It's about purchasing power. If it falls too far, imports surge, inflation rises, living standards drop, If it rises too much, exports suffer, global debt strains, other economies crack. There is no perfect level, only balance, and balance is fragile. The dollar's strength rests on three pillars: trust in U.S. institutions, relative economic performance, and global demand. If those hold, the dollar holds. If one weakens, pressure builds. So who decides the value of the dollar? Not one person, not one office, not one law. It's decided in the space between policy and perception, between trust and fear, between supply and demand. The dollar isn't controlled. It's negotiated every second by the world. And here's the question that should make you pause. If the value of your money depends on global trust, what happens when trust itself becomes unstable? That's not just an economic question. That's a future question, and it's still being written.